morning. It's your girl Sabi Abby, aka Abigail, aka Chide, aka I don't even know what I'm saying anymore. So it's a Saturday today and I am the only person here. So what do? We make noise. This is our trading academy. You know what? Let me reintroduce you. I'm going to show you around, So this is my seat. This is a vacant seat that will be open to students who want to be a part of the academy. We do that sometimes when people who want to trade alongside myself and other facilitators get to join us. So yes, this is a vacant seat. This is for a colleague as well. And then this is our trading robot desk. Every monitor and laptop you see here tracks a different robot. We do that and we make them available part time. Then this is also for a colleague. Empty desk, a colleague. So yes, this is our TV. This TV is just to watch Bloomberg and different news releases like that. I don't know how I'm going to carry this ring light, but yeah, let me show you around. This is the classroom. So this is where we host our training sessions. And our TV, pulpit, is it pulpit or pulpit? Or pulpit, or pulpit, or fulfill, or I think I'm going to spend a relevant amount of time today back testing the market. So should we do a video showing how to backtest? Because not everybody has an idea of how to do that. And I've done that, but now we can't, unfortunately. But yeah. Okay, so when I was backtesting and studying the market, as I mentioned earlier, I was now going through my past trade results and also my trade journal. And while doing that, I thought of something that I'm going to be sharing in this video, and that is risk management, right? Going through this book made me laugh so much because I was just looking at different parts where my psychology and emotions almost got the best of me. My favorite book. So that was what gave me the idea of now focusing on risk management and trading journal in general. Now, when it comes to trading, right, it is one thing to learn the strategy aspect of trading. It is another thing to now be able to make sense of emotions and how to handle them. And I'm going to share my own story. When I started early on, psychology was a big issue for me. But thankfully, I started my trading journey on a professional trading floor in a professional setting. So we had somebody who would always come around to check our progress, our risk manager, and you have to answer for every trade you take. Like if you take any trade that is against your trading plan, you're going to explain, and nobody would want to be in that situation to have to explain why they broke their rule. So it forced me and a few of my colleagues to stick to our rules, and it really helped me primarily. So yes, I'm going to be sharing that with you. I call this strategy a 20 trade rule. The 20 trade rule. What does this mean? It means that I am willing to take 20 good trades. By good trades, I mean trades that I took respecting my trading plan, respecting my rules and my regulations, and I stuck to them regardless of my feelings, regardless of the fear or the greed that crept in at any point in time. And I said I was going to share my story. So early on, I'll be in a trade, right? And say for example, I've decided to risk $5 in that trade, and the trade will be going straight to my SL. In that moment, a part of me will say, okay, what if I just drag this stop loss a little, take it to $7 so that to have more room to run? And over time, I started to realize that even after dragging that stop loss, sometimes it's still going to kiss the SL and then reverse. What made me start even dragging that was actually a legit reason, in quotes. I started to notice that the trades would hit me out and then immediately reverse. So instead of me to sit down and try to refine my entries, refine my exits, I started to increase stop loss, which over time I got to realize that it was only a matter of time before I would lose the account. So I was willing to go $7, $8 in stop loss, but when it now comes to take profits, I would not be willing to stay to the end. Now I was maintaining a 1:2 risk to return. So for every $5 that I was willing to risk, I wanted to make $10. But after losing 7.5 or $8 by breaking my rules, and then I'm now in a trade and the trade has done $3 in profit, I am rushing to close that trade because in my head I'm thinking, if I can just do $3 three times, I'd have recovered the previous loss. Baba, I was just ranging and the range was starting to look like a range to the downside, so I knew a change had to happen, right, over time. So I had to be disciplined, and that discipline was also enforced on me by the people around me. And that is why now when I speak to people who mention that they are going through a lot in their trading, the first thing I ask to see is their trade statements, their trading journal, just to see if there's actually discipline behind their strategy. And it's been working. It has helped a few of my students, so I'm going to be sharing it with us as well. So imagine that you have decided to fund your account with $100, and that $100 you said, okay, I am going to give this account 20 shots. It is either I make profit on this account or I lose the account after 20 trades. Now in most cases it is almost impossible for you to lose 20 trades at a stretch. In fact, after losing the first 10 to 15 trades, you yourself will tell yourself, Baba, calm down, and go through your trade statement to see what you are doing wrong. It is almost impossible. But let's say for any reason you happen to lose 20 good trades, then you have to realize that there has to be something wrong with your trading strategy. But I digress. So you've now said your $100 will be divided into 20 parts, $5 per entry in the market, and you have a 50% win rate. So that means out of that 20 trade, you can make 10 go to take profit, and then the 10 goes to stop loss. So if after 10 trades that go to stop loss you lose $50, you now have $50 left. But now you're now maintaining a 1:2 risk to return. So that now means that the remaining 10 trades that went your way were able to give you a return of $100. So $100 plus $50 initial balance left now becomes $150. So at the end of the day, you are still in profit, right? You've made 50% on that account. Same thing applies to a prop account. So let's say you're going the prop account way and you decided to get a prop firm account with, say, FTMO, because right now I believe FTMO is one of the most guaranteed prop firms out there. But instead of funding that $100, you then decided to buy a prop firm account, and I think their 10k account is about £89. That's like 160 or 170,000 naira thereabouts, depending on today's exchange rate. And for this $10,000 account you have with FTMO, they'll tell you that your maximum loss is $1,000. So that means that once you hit $1,000 maximum loss, you have lost the account. So in the real sense, you don't have 10,000 to trade, you have $1,000 to trade. You can now decide to go ahead and say, okay, I'm going to divide this $1,000 max limit that I have into 20 places. Now what you have now becomes your stop loss. So this will now mean that you have $50 per SL, $50 per SL as your stop loss for every trade you take. If you now still maintain the 50% win rate and a 1:2 risk to return, you will still be in profit, and over time you're going to end up passing that account. But what people don't fully do is what I just spoke about. Everybody goes by vibes, and then there are also people who go by percentage risk. What this means is that there are people who would say, I'm going to risk 3% on my account per trade. Now there are aggressive traders like that who have mastered that art and they make it work, right? But if you're somebody who is just figuring trading out, you don't want to be risking 3% per trade, especially when you're trading a prop firm account. I feel like prop firms force you to be strict, they force you to be disciplined, because you have to maintain those rules. If you're trading a normal account, you can do whatever you want. It's either you make money or you lose money. But if you're going the prop firm way, you need to have a plan. So while I was thinking of all this and thinking of how to share this, I decided to also share my trade plan. with you, and I really hope it helps at least one person. So a forex trading plan typically should have a trading goal. You need to be working towards something. You're not just trading based on vibes. All of us who decided to come into the forex trading space did that in order to pursue something which is generally financial independence and eventually financial freedom, right? So you need to have a goal. You need to have a monthly target, because if you're trading without targets, what would now make you stop, right? What amount would you get to that you now know, okay, I've done enough for the month, I can rest? If you're just trading based on vibes, I hope you get what I'm trying to say. Then you have to have a long-term vision. For me, trading is not just a hobby. I see it as a career path, and I believe some of us also do. It is not something you just do on the side out of vibes, right? There are people who do it as side gigs, which is fine, especially when you are figuring it out in the beginning. But for those of us who have said it's trading or nothing, this is a full-time career that we're willing to pursue. And I know you're not going to carry or pursue your career based on vibes. You have to have a plan. So have a long-term vision and have a target for every account that you trade, so that when you hit it, you know that you are done. You also want to ensure that your trading plan also includes your trading strategy from top to bottom. I wish you could see this, but you'd have seen my top-down analysis pattern all the way from the 4-hour all the way downward. Now, for those of us who do not know, I am predominantly an indicator trader, and I only do market structure because I know that not all of us have access to the indicators that I use, and that's why I discuss market structure sometimes, but predominantly I trade indicators, and I have a trading plan for that. Now, if I hand this trading plan to someone else who is not me, especially my colleagues on the floor, they are able to follow this plan and say the exact same trades that I will take. That is how your plan should be clear. That somebody who just has basic idea of trading can look at your trading plan and say, okay, I want to see A plus B plus C plus D, and I pull the trigger. Right? That is true. Then you need to, by then, of course, if you have a trading plan, I'm sure you've already decided if you're going to be an intraday trader or a swing trader, based on your time or even market conditions. The third thing you also want to have, which falls under the trading strategy, is your entry and your exit criteria. What makes me leave the market? Where am I going to place my stop loss? Where am I going to start to trail my stops? Because there are people who trail stops and stuff like that. Then you also want to put fundamentals into consideration. There are days we have these releases that come out, like the FOMCs, the NFPs, the CPIs, right? Different central bank policies and interest rate decisions. Pay attention to the days that those come out. Thankfully, when you go on platforms like Forex Factory, you can track them ahead of time. Okay, this news is coming out on XYZ day. Put that in mind, right? Put that in mind. Then your risk management, which is what we just discussed. Risk per trade is important. Am I going to be risking 0.5% of my total capital? If yes, how many trades per day am I willing to lose? So you can now say 0.5% per trade. I am willing to lose 3 trades per day. So in a week, that now equals about 7.5%, right, at the end of the week. So you're saying per week, I am willing to lose 7.5% of my trading account at the end of the week. If at the end of the week, you lose 15 trades, risking 0.5%, something is wrong somewhere. So you go back to the drawing board and look for what you're doing wrong, right? The stop loss strategy, which I already covered. Are you going to be trading your stops for profit protection? And I don't mean that when your trade has gone 10 pips, you're now trading stops, pushing your stop loss back to BE. No, depending on your strategy, of course, or even your risk to return. But ideally, if you're targeting 60 pips as a take profit, the only time I believe you should even start thinking of trading your stop is when your trade has gone at least 20 pips in profit. Okay, then you also want to have a max drawdown limit, which I already spoke about, and a trading routine. This is so important. You don't just want to be trading based on vibes. You need to be disciplined. It's like going for a job. Okay, I work in an office. I need to be at my office by 8 a.m. Same thing with trading. Wake up early. Do pre-market analysis. So you can do your pre-market analysis from 7 a.m. to 8 a.m., 8:30 a.m. People do it way faster than that. Most people do it in 15 minutes, 20 minutes, and they are done. Then you want to, during that moment, identify buyers, key levels. You want to mark out the high impact news coming out for that particular day. When you've done that, then you can now have your live trading hours, where maybe the ones you didn't see aligned when you were doing your pre-market analysis are finally aligned. You're taking them. So you can say 8:30 to 10 a.m. I am strictly trading, or 2 p.m., 1:30 p.m. to about 3 p.m. I am actively trading. depending on the different sessions, of course, the London session and the New York session when there's more volumes in the market. Then after you've done all of this, you need to try to force yourself to focus on high probability setups. These are typically trades that align with your trend, right? What I consider high probability setups are trades that align with your trend, so you want to stick to that. Then you want to have an end of day performance. I don't always do this as well, sometimes I forget, but you need to try to learn. I'm also trying to enforce this particular point on myself, where you go to the trades for the day and you look at what you saw before you enter certain trades. Some of them might still be running. I think that's one of the major reasons why it's gradually started fading out of my routine, because most of the trades will still be running by the time that I am leaving my trading desk, so to be to the next day. But I do weekly performance tracking and monthly performance tracking. Then psychology and discipline. You want to stick to one strategy at a time. It is so important. For me, early on, I learned about 4 different trading strategies, 4 or 5 different trading strategies, and it was a problem at a point, because strategy A will be telling me to buy, strategy B will be telling me to pause because there's an order block somewhere, strategy C will be saying, you get? So it was so confusing at a point. I had to drop everything and say I'm going to stick to this and this alone, and that is predominantly what I use in trading my account. Then you want to accept losses. Accept losses as part of the game. This is just an extra point of things you can write down in your book. Losses are part of the game, because if you're coming into trading thinking you're not going to make any loss, or you're even afraid of making losses, this might not be the right profession for you. Sorry to say, but it is the truth. It is part of the game. And of course, the performance tracking that I spoke about, you want to look at your win rates, your risk to reward ratio, etc, etc. You can also use platforms like forex.com. forex.com helps you to calculate your position sizing, because when you're trading asset classes like Euro USD, you could get an entry, very precise entry, that the max stop loss you're going to be using will be about 25 to 30 pips. But if you're not going to trade an asset class like gold might now be about 60, 70 pips stop loss. So if you have a dollar value of what you decided to risk per day, you can still make it tally using the forex position sizing tool. I would have added that, but by now you should know that I don't like making my videos too long, so maybe I'll make that a different video, most likely. But yes, I really hope this was helpful to somebody. If you want a PDF document or a guide on how to use what I just stated to your own advantage, just leave a comment and we're going to connect, and I'm going to ensure that you get access to that. Okay, so that's pretty much it. I am going to be calling it a wrap here, and I'm going to be leaving the trading floor very soon because I have some errands to run. Thank you so much for watching to this point. I look forward to seeing you in the next video. As always, have an amazing trading day. Cheers and God bless you.